Troubled digital mortgage lender Better.com going public today, tapping on the NASDAQ, and it's happening via a SPAC merger with Aurora Acquisition Corp. It's been a long and very bumpy road to this listing. The merger was originally announced, if you remember, back in 2021. It was delayed a few months later after what was now an infamous Zoom call. We're going to talk about that as well, when 900 employees were laid off over Zoom, created a lot of hysteria online and elsewhere. Since then, the company has laid off thousands more, bringing today's workforce down to just 9% of its body count back in 2021 when the deal happened. Now, throughout all this, multiple executives have resigned. The SEC opened and then closed an investigation, and former employees have come out against Better.com's workplace culture. Also want to talk about that. But today, the company hits the public market and is expecting a new infusion of cash from SoftBank and others. Joining us right now on the set to talk about all of it, Vishal Garg. He is the founder and CEO of Better, and it's nice to see you this morning.
Thank you for having me. I'm excited.
But it has been quite a road. So let's sort of walk through all of those component parts, because for better or worse, a whole bunch of people met you for the first time when you actually were saying goodbye to a lot of other people who were working at the company. And I wanted to even just take us back to that as a way, because I think for a lot of our viewers who were just getting introduced to the company, they knew it from that moment. What was that moment like, and what did you think was going to happen to the company after that, actually?
It was a really tough moment. We had a period where we had grown from doing $500 million a year of originations back in 2017 to getting to $5 billion a year by 2019 to going to over $58 billion in 2021. So if you can imagine this 100x period of growth, all coming to a very, very crashing end as mortgage rates started to increase. And so we needed to downsize our workforce, which had grown from 100 people to over 10,000 people. And honestly, we did it in not the best way. We did it over Zoom rather than handling it one-on-one in a much more empathetic way. And while I regret how we handled it, ultimately the decision to downsize in advance of what became the worst interest rate cycle in mortgage history was the correct one.
Well, I want to talk about what that portends for the business going forward, given that there are now going to be public investors who are going to have money at stake with it. But the other piece of this is that rather than raise capital privately, you decided to pursue a SPAC. At the time, it was the way that everybody was trying to raise capital. And there were real questions about, this is now taking 2 years to close effectively, whether it would close, whether this was the best path, whether you should have tried to walk away from this deal and could have you raised capital from others? Have they now, meaning the public, completely overpaid for this company? How do you think about all of those things?
I think those are all really great questions. Ultimately, our mission is to make homeownership cheaper, faster, and easier for all Americans. We had a committed deal where our SPAC sponsor plus SoftBank were committing $1.25 billion of capital to the company. And ultimately, that amount of capital is not available in the private markets for mortgage companies nowadays. Right. So coming out of this transaction, we're going to be, there's 4,000 private mortgage companies out there. We're going to be one of the top 5 capitalized companies to survive the interest rate cycle and to thrive when rates go back down again.
What do you tell those investors, though, the folks 2 years ago who got into this then?
I tell them that great multi-generational companies in the largest asset class in the world, the U.S. housing market, we're disrupting it. And we're making home loans cheaper, faster, easier. We've done over $100 billion of home loans since we got started, and that's only 7 years ago. And we look forward to getting to the next mark.
So fair to say or not fair to say they overpaid? And I say they overpaid because obviously you couldn't go get that kind of money today.
I can't tell you in the test of time whether they overpaid or underpaid. All I can tell you is that we are one of the best capitalized companies in the market, that we are disrupting, that we're making rates cheaper for all Americans. We're making homes faster for home finance faster for all Americans. And ultimately, that's what matters. And if we're able to do that, then we're going to build a company that's going to be extremely valuable.
The SEC opened an investigation and then closed an investigation, which is allowing you to pursue this. Mm-hmm. But they raised a lot of questions as well during that period. There have been instances now where we've seen the SEC investigate companies before they've gone public, and then later on, actually, even after, I'm thinking of Coinbase and other things. I know that's it's different, but how concerned are you that some of the questions that were raised then may come back?
I'm not concerned at all.
Okay. And then let's just talk the mortgage business itself. Because it sounds like you're saying this is a bad. I don't know. Is it a bad business right now? Is that fair?
I would say the mortgage business is at its toughest levels in 20 years.
Okay, so here you are going public at a time when it's the toughest levels ever. How do you get out of that? And do you have to change the business model? Do you have to get into a different business? What are you going to do with all this money?
We have to keep delivering for our customers. Ultimately, that's what matters. And if we're able to deliver what we've launched, we launched one-day mortgage 9 months ago. We've barely spent any money advertising it. And ultimately, we think that that's going to change and revolutionize the business.
You said when rates fall that you're gonna kick butt, but I mean they might be higher for longer. It sounds like Kelly. She's buying all these bonds. She needs rates to fall for that to be a good investment. Is that?
I would say we are highly levered to rates falling. The last time rates fell, we grew 10x, and
that means the economy is going to be bad, so people aren't going to be able to buy houses. It's weird the way it's sort of a double-edged sword, right?
Housing affordability is at its 10-year low, and the demand for houses post the pandemic has shifted permanently because the utility function of houses has improved. So a house is not only where you live, but it's also partially where you work. So houses are more expensive than they've ever been before because the utility function has changed permanently. And so ultimately, we think that you can have a recession, you can have interest rates going lower, and you can have demand for housing.
So you're pretty sure rates are going lower within 12 to 18 months?
Rates may go lower in the next 6 months. Rates may go lower in the next 18 months. I can't tell you that.
But they're going lower.
All I can tell you is...
We're not going back to like what I'm used to, 7, 8, 9% 10-year. That's what it was all through the 90s and early...
Ultimately, Western economies cannot afford a 7, 8% rate.
Really?